This segment is sponsored by New Perspective Financial Solutions. Roth conversions are one of the most powerful retirement tax tools, but if done incorrectly, they can lead to huge tax surprises. In a situation we'll discuss today, how one woman converted $100,000 in a single year and found herself owing tens of thousands of dollars in unexpected taxes and Medicare surcharges. Here to make sure that doesn't happen to us is Tayvon Jackson. Tayvon is a financial advisor and the founder of New Perspective Financial Solutions, a DC-based firm that focuses on preparing people for retirement. Welcome back. Great to see you.
Oh, thanks for having me.
Of course. Okay, Tayvon, can you explain why this Roth conversion created such a large tax bill?
Yeah, so pretty much she didn't have any advice. She pretty much did it on her own. So whenever you do a Roth conversion, what you're saying is that, hey, I want to pay the taxes on my money now versus waiting until later. So what happens when you pay the money now is that that income gets added to your taxable income. So if I'm making $100,000 a year and I convert $100,000 to a Roth, now to Uncle Sam looks like I make $200,000.
Got it.
And a lot of people are doing this in their TSP and their 401k, but they don't realize that those plans don't take out enough federal taxes and it doesn't take out any state taxes. So whenever you do that Roth conversion, you're going to owe federal and state every single time. So you got to work with an advisor that can actually put together a tax plan for you so that you do it the right way.
Sure. Is that a common mistake? And what are the key mistakes people are making when they do this on their own?
Well, it's two things. One, Uncle Sam, they don't make you touch any of your plans until you're 73 years old. That's called your required minimum distribution. So if you have a 401k, they force you to take it out at 73. The issue is that we don't know what the taxes are going to be in the future, which is why some people say, hey, let's just pay the taxes now. I think that you shouldn't do the Roth conversions. I think you should just wait till 73. Because if you have $1 million and you're 60, why pay the tax? Why give Uncle Sam all the money right now where you don't have to give it to him till 73? Yeah. Because then you're kind of stunting the growth of your portfolio where it can just grow uninterrupted until you actually have to take it out. Yeah. So I prefer you just wait till your RMD age, but some people just want to be proactive, but you got to do it the right way.
Got it. Makes sense. Makes sense. How can retirees decide how much to convert each year without pushing themselves into that higher tax bracket?
Yeah, so there's tax brackets. So if you ever just Google 2026 tax tables, there's different levels to the tax brackets. So if you're in the 20% tax bracket, we're not going to convert more that's going to push you into the next bracket. So let's just say the brackets, I'm just making up a number. Let's say the brackets are from 80,000 to 100,000. We're going to try to keep you in that window. Because if we go to 101,000, then now you're in a higher tax bracket and it defeats the whole purpose of doing the Roth conversion.
Right.
One other thing to look out for is that when you do the conversion and you're over 65, you're going to get a notice in the mail saying that your Medicare Part B premiums are now higher. And the reason why is that Medicare actually looks back 2 years at what you were making. So you can do a Roth conversion today and then 2 years later, you get a notice saying, hey, now you owe $600 a month for Medicare. Oh. So you have to be very, very strategic. Yeah. It's not for everybody. I know a lot of advisors talk about Roth conversions, but it's not always the best thing for each individual person.
Got it. This is really good advice. What other advice do you have for any viewer right now who's considering a Roth conversion?
Yeah, so I would say just take a step back. And if you're still working, you don't have to convert your whole plan. What I would do is I would just drop my contributions down and do more new money into the Roth 401k. So instead of just doing all the traditional, which is what most people do because they want the tax write-off, just drop that traditional down, do a little bit more in the Roth and kind of build up that Roth bucket as well.
All right, always a wealth of information. Thanks, Tayvon. For you at home, if you want to make sure you're on the right track for retirement, New Perspective Financial Solutions has an offer for you. Tayvon wants to help preserve and continue to grow your money while also helping you create a reliable income stream. So right now, for the first 5 callers and anyone else with investable assets of $500,000 or more, he's offering a complimentary retirement income plan. This will allow Tayvon's team to sit down with you personally or schedule a call to make sure you're on the right track for retirement. The number to dial is 240-335-8366. Again, that's 240-335-8366.